It seems to be that there's quite a bit of optimism around, and initially yesterday quite a positive reaction to the fact that we could well see M&A activity go full steam ahead, at least on 4 of these players that have been rescued by AMCON. What's your take on the situation as it's played out?
I think it was an interesting statement by the CBN on the, as you reported, the four banks are expected to sign recapitalization plans. I think it's key to also point out that what will be signed are MOUs with the boards of these rescued banks. They still have to go through a process of having shareholders agree any agreement through an EGM or an AGM, and that could be quite daunting because a lot of some minority shareholders are taking quite hard positions on the issue.
Taking a look at an article that's emerged today, though, in the Business Day, there seems to be a bit of skepticism about this entire process, where we've got the share ownership structure tussle being engaged in at this stage of the game between banks and potential buyers. Has that raised any red flags for you?
It has. The process can be difficult because of these issues. Existing shareholders are many of them are taking a hard position in sense of their holdings in the bank and the recapitalization process, because they want to make sure they hold as much of the bank as possible. And what the CBN governor and AMCON to an extent have been saying is, in reality, given the negative capital positions of these rescued banks, the shareholders' influence on the banks has lessened. And so the only other option, if recapitalization is not allowed to go through, is liquidation, where the shareholders might end up with nothing.
Taking a look at the situation at this stage, I mean, would you be delving into any of these rescued players at this stage? I mean, speaking to various brokers thus far, it seems that a more tentative approach has been the one that's adopted.
Yeah, no investor likes uncertainty, and there is a lot of uncertainty about the whole process. The way CBN and AMCON and its advisors have driven the process has led to the process being pushed along. But in the end of the day, existing shareholders have to make a decision. So I think I will not be investing in those rescued banks or advising my clients to at the moment, especially the uncertainty, and we have elections in April as well. I think what most investors are looking at now is looking at money market, especially T-bill rates of between 7 and 9%, especially for 90 and 180-day T-bills, which will take them over the election period and possibly over the recapitalization period before moving to the market.
Of course, headlines today as well running that investors have been swinging positions to maximize their returns. To what extent are we seeing this shift play out, where there's been a movement from the equity space into various other asset classes?
I think to a big extent. Not only have you got things like T-bills are having pretty good yields for short tenor, which can take investors over the uncertainty of the election period and also of any recapitalization period in the banks. We also have quite a public disagreement between the ex-CBN Governor Soludo and the Minister of Finance Aganga over the state of the economy, which has been splashed across the papers for in the last week and a half, and that has obviously not helped investor sentiment.
But positive news when it comes to the state of the economy as well, where we've seen for the fourth quarter of last year, the economy grew by 8.29%. Market reaction to that news, was it in line with consensus?
I think, yeah, market line was in line with consensus. We're seeing a lot of decent growth figures coming out from the economy. But the big issue for a lot of economists is that it is not in industries where you have which can tackle mass unemployment or underemployment. So what we're seeing is decent growth figures all through the year 2010 from the Nigerian economy, but it has not filtered down into employment figures improving, and that is the key. That kind of growth has to filter down into unemployment figures for there to be real progress.
At this stage of the game then, with this being the current scenario, how are you playing the game right now in terms of investment in the equity space?
In terms of the equity space, I'm going back to my mainly defense stocks, which are in food and beverages, the likes of the multinationals like Nestle, and like Nigerian breweries, and just staying in those stocks because despite the uncertainty over elections and the state of the economy, those stocks have shown a historical trend of actually doing well despite how the economy is doing. So I'm staying there, and mostly that's in the equity space. But a lot of my investments right now are in T-bills to take me over the election period.